Joining us is Ruchir Sharma, Chief Global Strategist and Head of Emerging Markets at Morgan Stanley Investment Management. Ruchir, great to see you. How are you doing?
All right, good to be back. Thanks.
So you last came on with us on this show in April and were very bullish then on EM. What's delayed that call playing out?
No, in terms of what I had said back then was that this has been the worst decade for emerging market equities. And we have data going back the last 10 decades, so nearly a century. And my basic point was that what happens one decade rarely repeats itself in the subsequent decade. So last decade, the exact opposite happened. The charts that you're showing here of how emerging markets have done nothing this decade and the US has tripled in value. The exact same chart could be shown for emerging markets versus the US last decade with the roles completely reversed. So this has been America's decade, that the only thing which has worked from an equity investing standpoint has been investing in America and investing in obviously large cap tech in America. Everything else, Europe, Japan, emerging markets, has been pulverized in terms of relative performance compared to the US. So my basic thesis is that in the coming decade, we are likely to see a role reversal and that America will peak and some of these international markets will do much better, as has been the norm for the last 100 years, that when you have a very powerful trend of one decade, it doesn't repeat itself in the subsequent decade because trends get very stretched by the end of the decade. You get complete belief, you get valuations which get very stretched compared to the rest of the world. And the American stock market today, relative to the rest of the world, is trading at multi-decade highs in price terms and in valuation terms.
So, I mean, the valuation argument is there, Ruchir, but what's the actual trigger that would change the dynamic?
Well, the actual trigger is this. We have to look back as to why did emerging markets underperform this decade. And, we were among the people who said that emerging markets would underperform this decade at the beginning of this decade because expectations were far too high in terms of economic growth rates. The entire narrative was how the BRICS would take over the world, on how these countries could keep growing at 7, 8, 9%, from Russia to India to China to all these nations. What's happened is that we've had a very major expectations reset, and that the excesses of the last decade, when so much debt was taken on in many of these countries, a lot of those excesses have been cleaned up. So this is very much a cleanup process that we have been under. And I think that come the following decade, you will begin to reap the rewards of this cleanup that's happened in this decade.
Ruchir, does a rate cut by the Fed help emerging markets?
At the margin, yeah, but I think that the Fed's followed a easy money policy for much of this decade. So I think that this rate cut sort of keeps us very glued to the short term, but the longer term picture really has to be that when do the fundamentals of emerging markets improve? When do the current account deficits get more manageable? When do the debt situation gets more manageable? I think we're getting to that point. So for me, that's more important. Regarding the Fed's policy, really, as long as this bull market continues in its current avatar, I think the US keeps outperforming because leadership doesn't change so late in a bull market. So what I'm looking for is a situation that's analogous to 98 to 2002, when the US kept on outperforming, but then we began to see a churn once the US peaked. And then when the new bull market began, we saw this massive outperformance for emerging markets. Now, it won't repeat itself in an identical way, but that's roughly the playbook that I have in mind.
I was going to say, Ruchir, I mean, what do you say to those who point out that period of great performance on a relative basis for emerging markets was really a credit and commodities boom altogether that may not repeat again?
That's true. The magnitude of what we saw last decade is very hard to imagine. So this could be something which is very different in nature, but it's still something which points to greater outperformance. Look at the global economy today. Emerging markets are about 35% of global economic output. Their share in the equity market universe is just 12%. That's a massive disconnect you have here. In the United States, it's pretty much the opposite. The share of the US economy in the world economy today is about 25%. The share of the US in world economic in the world global stock market capitalization is 55%. So a 30 percentage point gap in favor of the US in terms of economy versus the market, and the exact reverse in emerging markets. So I think that putting more capital to work in emerging markets will be helpful over the next 5 to 10 years. But yeah, if you had me on the show again 3 months from now, just like you had in April, will that trend play itself out? I'm not sure. I'm not that confident about that because these trends take a while to reverse themselves. At the beginning of this decade, I couldn't get enough people to sort of be skeptical about commodities because we believed that commodities was in a massive super cycle. It was going to last forever. These countries would keep growing forever. And here we are, where commodities are sort of almost seen as a repugnant asset class. Tech is the only thing that we speak about. So these role reversals happen, but they take a while to play themselves out.